Good morning, everybody, and welcome to this Q1 presentation by Echo Investments. We have today with us me, Niklas Lindberg, the CEO of the business, Maciej Drozd, the CFO of the business, and Piotr Gromrak, who's going to present for you the Resi for Rent business. We have divided the presentation today that we're starting with a glance of the Q1 results, then we go into business by business, and then we go into Resi for Rent, and we end up with a deeper dive into the financials. So I hand over to Maciej Drozd to start with the introduction.
Welcome again. Let's start from the highlights of the beginning of this year. So what happened between the beginning of this year and today is that we sold 348 apartments, which is a very nice dynamic compared to the Q1 of last year. We handed over 70 apartments, and I will come back to that. Of course, there is a typical seasonality in our business. Most of the apartments are being handed over usually in second half or even the fourth quarter of calendar year. We launched Resi for Rent, and Piotr Gromrak, who is present today, will tell you much more about that exciting new business opportunity and actually a new business segment for Echo. We started one office project, which is called Face to Face in Katowice. We fully leased a brewery, Warsaw Brewery Building J, which is a first office building. Actually, if you look through the window or if you get out of this place, you will be able to see that the building reached its maximum height. So it's so-called wiecha in Polish. And by now it is already fully leased to reputable tenants. And we see very strong interest from potential investors to buy this building this year. We closed, actually not in Q1, but a few days ago, a Westlink transaction. It's a sale of an office building in Wrocław. We have approved prospectus by KNF for 400 million. This is for issue of retail bonds, and out of that we issued already 50 million bonds recently. And we also issued 440 million of bonds to institutional investors. So we were quite busy in this, few months, and I would like to share with you the outcome, the financial outcome of our performance. So starting from the top line, you can see that our revenue is not as high as it was a year ago, but there's an important reason for that. We have changed accounting principles starting from this year regarding recognition of revenue on the sale of residential apartments. So we'll talk later a little bit more about that, but the effect of that is that there was a shift of revenue that would otherwise be recognized in Q1 to Q4 of last year. And also slightly negative impact on net profit of 2.8 million PLN. But it's a one-off effect, and of course it doesn't really, change the picture. I'm just explaining that without that our revenue actually would be higher than a year ago on the sale of residential apartments. What is very positive is that our margin on the sale of apartments is high. A year ago it was 19%, this year it's 28%, and this is also a proof that we do focus on margin and on financial result in our residential segment. Our profit before tax is around 10 million lower than last year, but last year we had still on our books shares in EPP that were consolidated. So we consolidated the income of EPP directly, quarter by quarter, which is not the case now. So in Q1, we don't have any direct impact of the shares, 50 million shares in EPP that we own, but in Q2, we already received a dividend, which is paid by EPP twice a year. So instead of 9 million recognition of income, in Q1, we have received in Q2 12 million of dividend. So it's again actually a shift in the timing. So Our results are absolutely satisfactory to us, and I would like to also point out that our net debt remains low, at around 29% net debt to assets, which is a similar figure to Q1 year ago. What is probably most important to everybody is the outlook for the remaining part of the year. So let's look at Q1 and the remaining quarters, line by line, the main factors influencing our result. So as you can see, we have recognized 10 million PLN of margin on the sale of residential apartments. And that was on 70 units that we handed over. According to our plan, we will hand over in this year 1,000 apartments. So still 930 remains to be recognized in our profit. Also, we have recognized a fair value increase on a number of projects that was almost equal to 100 million PLN. But again, if you look just by the number of projects and by the phase, in the project life, the remaining part of the year obviously looks much stronger, in particular because we are preparing to the disposal of the remaining projects still this year. And these projects are Brewery J, Libero in Katowice, which are also being marketed, and we will talk a little bit more about that. This is O3, Business Campus in Kraków, which is already under preliminary sale agreement. Sagittarius, that should be sold in this quarter, and a few other projects that we started or will start this year and may or will affect our fair value adjustment in Q2 or 3 or 4. As I mentioned, we have received dividends from EPP already in April. It was around 12 million PLN. And similarly to last year, of course, we continue to value our interest in projects that we don't fully own, like Młociny. So clearly, this is also to be expected, the effect of this valuation still this year. Just to remind you, Młociny will be opened in Q1, Q2 next year, so it's very much advanced. Now, segment update.
So going through our projects that we have ahead of us and we're working with now, as we have the curtains down, you cannot look out at the Warsaw Brewery. Like Maciej said, we are now topping up on the building J, where we are now 100% leased at a very early stage of the project. And it's all leased to reputable tenants. So you really see the interest for areas like we're doing here, that is a destination project, that is a mix between offices, residential, resi for rent, and the big retail portions. You also see here that our residential buildings, both building A, B, and C, that we have started up, are all of them close to 100% leased. So it's a really impressive results of the projects we have started so far. What you see ahead of us now in the coming months is the 2 remaining office buildings to be started, which is building K and building G and H, which amounts up to another 35,000 square meters of office space. We have another residential building that we're starting up, which is the last of our residential buildings. And then we have all the historical cellars with the underground. So what you will see during the remaining part of 2018 is that we're going to start up the whole Warsaw Brewery. This means by 2020, these buildings will be fully up and running and the whole area will be operational. So this will be the first real destination project that is completed and alive from Echo, which means all the public squares, all the things here are being renovated and designed to what we wanted it to be. So this will be really an impressive way to look at it, and also all the public squares will be handed over to the cities. What we have done now until today is that we have completed 3 buildings. You see Sagittarius Business House here. We have occupancy permits. BNY Mellon, Ernst & Young has taken over the space. They are up and operational in the building, and now we're preparing for sale of the building as agreed per agreement to H&H. Westlink Wrocław has already been closed during the last days, so that's already handed over to the tenant. O3 Business Campus in Kraków is pre-sold to EPP. We are now moving forward with the leasing in a rapid pace, and in Q3 we will most likely be able to convert that into a final agreement with EPP. So you see in all the buildings we are completing, we are advanced in leasing, we are pushing it forward, really to be able to hand it over as early as completion as we have in our business plan. We also started up new projects. We have the face-to-face in Katowice. In Katowice, we have not been present for a year, but we have no buildings on the market, as we have leased up the earlier buildings in Katowice pretty early. What we see now, we're starting a new building. As you see on the picture as well, the face-to-face has a lot of public squares. We're doing much more of the public squares, both in our office, retail, and all the destination projects. We really believe this is the future of the market. We have started up one of the buildings, and we are now progressing with the leasing. We are very early in the construction. But we see a huge interest here from tenants that want to come into areas like this. And once we are leased up to a satisfactory level in the first buildings, we will move forward with the second buildings. This is an example of more projects that we're going to start up during the year in offices. Because if you look at our office stock, most of the things we have done so far are sold or pre-sold. So we need to have much more leasing space able to be leased by tenants, because we have pretty much fully leased in most of the buildings. Here you see the plan, what has been accomplished today and what is going to be accomplished going forward. We're going to start up face-to-face. We're going to start up Warsaw, both K, J, and H. We're going to start up another building in Warsaw. We're starting up in Woods, and we're starting up in Gdansk. This is all according to our strategy to be a regional player. So you see here we start up buildings in all the different markets where we're being present. This is to satisfy the needs of our tenants that are mainly the BPO tenants, but also local companies from the market. So we really see this market moving forward. We see a huge interest from tenants, and we see this is the right time for us to start up new buildings. Libero, like we talked about before, the new shopping destination in Katowice. This building will open up by the end of Q3, in August to be more precise. We are now 95% leased. We are leasing up the last square meters as we speak. We are advanced with construction, and we are now marketing the building and starting talking to multiple investors. There's interest for these new shopping centers because they are different than other centers standing on the market. We have a much bigger food and beverage part of the center. It's created a big square outside where you can have food trucks, you can have other functions that are really adapting to the new way of shopping. So this is not another traditional shopping center being up. This is new in the destination area that we have developed all the rest of our projects. And that is also the interest we see from the tenants, being up now to between 95 and closing up to 100% very quickly. Garia Moschini, the really flagship project we're doing here now in Warsaw. We are 75% leased. The building will be handed over in Q1 2019. A huge food and beverage part of this building. You have 6,000 square meters on top of the center. That is food, beverage, entertainment, food trucks. This is really the way that's going to really change the way of shopping that we see it in Warsaw. You have a park and ride on the north of Warsaw, but is really also attracting a lot of people coming in there. And also this is done in the partnership with EPP. So we have the 30-70 partnership, which is really making sure that we don't need to invest too much equity in one single investment. There's an office part of 6,000 square meters that is already now pre-agreed with a tenant to take that space. So you see, really this is the interest that we see here, and now we are close to a year before opening, 9 months to a year before opening, and we are 75% leased, we are 100% leased of the office part of it, and this is really attracting all the new tenants to the market that we see here. So this we believe a lot that's going to be really a flagship project for Echo, and we also think it's going to give very good returns going forward for the company. Residential, the market that is growing quickly for us. 35% increase of sales. What we see here as well, when I was talking a quarter ago, we talked about 1,500 apartments being sold. We're now saying 1,300 to 1,400. And that is a simple reason for that. We focus much more on making sure that we deliver the returns to the shareholders that we are expecting. We see construction cost has increased dramatically over the past year. We are adapting to that one, but we're doing much more in packages as we're doing the rest of our business, going away from the general contractor in our residential part of the business to be able to keep the same margin. We also, like I told from the beginning when I was starting these presentations, that we are targeting to get 80% of our buildings pre-sold 6 months prior to completion. Today, we have sold it much, much quicker than that, which had the problem that as the building went along, the construction prices has increased, and we have not been able to take out that increase on the client that has already signed the binding agreements. So that's why we are now slightly slowing down the sales, selling as the construction goes along, so we can adapt if the construction costs, how they are adapting to the market. By saying that, we still deliver 28% profit margin on the residential business, but as Maciej said, we want to continue to deliver those returns going forward. And that's why it's so important for us to really focus on keeping the cost under control and selling it as the project goes along. If you look for the entire year, we're going to start up another 1,300 apartments. And this is coming around, as you see here, in all the different regional cities in Poland: Krakow, Poznan, Warsaw, Wrocław. And this is where we want to be spread. We want to be around all the different parts of Poland. We're doing a big part in Warsaw, but we also want to allocate to the other parts of Poland. The 1,000 apartments that's going to affect this year's profit are the same. So we have not touched that at all. We're going to hand over the same 1,000 apartments. So that will be showing us that we can keep the stable profit growth in our residential business. We have also done partnership for smart homes. We are really here trying to adapt to the future way of living. So we see here that's much more techniques, there's much more other things coming into the buildings that we have not seen in the past. And that's why we need to have partnerships. So we are signing up with the best people on the market, the best companies on the market to help us with this. This is for the change of accounting principle that Maciej will talk a little bit before. He will come into later as well. What we have changed is before we recognize the profit on a notarized deed. Now we're recognizing the profit based on the signed agreement, the client taking over the keys, and full payment from the client. So this is what we're changing now, and that is what's affecting the first quarter, and that will be having a neutral effect going forward. So this is a one-off effect, like we said about before. And you're getting a negative impact of 2.8 million PLN in about this one. If you look at the profit versus the turnover we have in this quarter, is because we sold one big retail unit in that quarter that is recognized here. It's a big retail unit out in the Konferencja project. That was the last unit we had left that we sold for close to 10 million zlotys, I think. And that one was the last one. So there was not a great return on that single asset, but it was the last one in that project. And that is what's affecting these figures. Land bank. We need to continue growing a land bank. And we are continuing growing a land bank. But what you see here is what's important. We continue growing a land bank, but we don't overpay for the land. We still have a very low price per square meter. We're looking for the right land plots to buy into in the right areas. We are focusing, like we said before, 70% on residential, 30% on offices. We want to continue growing our business. We need to have land. Land is the fuel that really continues growing our business, but we need to make sure that we don't overpay for the land. Looking forward, you can see how much land we have under negotiations, how much is in advance, what are we buying, and in which cities we are buying. This is crucial for Echo. We need to continue growing land bank, but at the right market prices.
Thank you. Now it's my turn. First of all, I have to say that I'm really glad that it's my opportunity to say about Resi for Rent business, new business line in Echo, because I've been working on this project for more than a year now. Well, I will tell you a few words about the market in Poland, about the market in Europe, about our product, how we see it, about our plans, and about, of course, our project that we have today. I will start from the market in Poland. You know very well how residential market in Poland is growing. It's last year it was 4th year in a row where sales of apartment growth was 20% year by year. Big portion of this flats were purchased by investors who intend to rent these flats. According to some analysis, around 30% of the whole stock of this residential project was dedicated for rental market. Still, the market there's a big gap between Poland and Europe. So if you see at this number showing how many rooms per person we have here in Poland, comparing to what we have in Europe, it illustrates that there is a huge demand here in Poland that has to be developed in the next years. What's good news is also rental level, which is growing. It has been growing for almost whole period, whole years. And how big is the market? There's no too many official information about size of the rental market, but there are some estimation prepared by REAS about the size of rental market. And in Warsaw, it's over 100 apartments which are rented at the moment. Kraków, it's also a very big market, almost 40,000 units, which pretty big market, surprisingly big market for rental products. And of course, Warsaw, where there's around 30,000 units, which are rented for individual clients. How much it is if we compare it to Europe? Here is the list of the countries, a percentage of flats which are rented. Leaders are always Germans. Poland has 15%, so it is much less than average for Europe. I would say that average for Europe, with exception from Germany, would be something between 25 and 30%. So there is, if we compare our country to Western Europe, we should say that there is still a big gap for rental market. Who are our clients? Who are people who are renting these flats, and why do they do it? For sure, there is some group who do it because of economical reasons. They just rent because they cannot afford to buy. But if we look at Germany, it's not this example. Well, according to a survey that we have, people who decide to rent, not to buy, are people for whom mobility is a very important point. Mobility, which is much easier when you are renting a house, renting a flat, than owning. It's much easier to move from one place to another. Another point is, I would call it mortgage capacity. So it's better sometimes to take a loan for starting own business than to take a loan to buy a flat. And of course, it's completely different priorities of young people today than priorities of their children. There's an old song, Polish song, Telewizor, meble, mały Fiat, oto marzeń szczyt. Sorry for Polish. It says that, for people age 40, 50, there were completely different priorities than for a young generation. Today, young people are thinking more about education, they are thinking about personal or professional development, they are thinking more about starting their own business than about buying a flat. Here's the result of our over 1 year work on this project. So here is our project that we have prepared in Echo. What do we have today? 4 projects and 1,200 units. This project are under construction at the moment. Another 7 projects are in a permitting stage, and they will be under construction until the end of next year. So this year, another 2 projects will start the construction. The whole 11 project will be under construction until end of next year. So altogether, we will have almost 3,000 units or in operation stage or under construction. So it is pretty good. what was very important, I would say even crucial for this project, is financing. For a project like that, financing is very, very important. So we have been working on it, and today I may say that we have this financing. We have signed term sheet with consortium of two financial institutions, where PKO SA is the leader of this consortium. At the moment, we are negotiating loan documentation, and in next couple of weeks, we should have loan documents ready to sign. So this is what we have today. What are our plans? 5,000 to 7,000 units in next 3-5 years. So assuming that today we have almost 3,000, I would say this that our plans are really realistic. A few words about our product. So I told you who is our client. I will tell you who is not our clients, who is not our target group. So as I said, we are focused on people, on young people who just decide to rent, not are forced to rent. We are not targeting on, I would call them budget clients, like students. We are not target on families. It's also because structure of our products, of our apartments, 90% of them are 1 or 2 rooms, so it's not the best solution for families. And our target is also not luxury apartments. So we are in this middle, but the biggest part of this rental market at the moment. We assume that we'll sign lease agreements for 1 year at least, so it will not be short-term lease. We want our tenants to feel like at home, so it cannot be in the same place short-term leases. Moreover, we give them an option that we will not give them full fit-out. So the fit-out will give fit-out in kitchen, in bathroom. It will be fully fitted out. But because we want them to feel like at home, so they will have an option to buy and to have their own moving furniture. It will be an option, so for those clients who decide to have fully fit out apartment, will be able to deliver for them also movable furniture. Why we are doing it in Echo? Of course, we are looking at money. We are looking at our profits. So Echo will provide development services for such a platform and will be paid. Echo will get 6% on whole development costs. We are pretty conservative with evaluating our products, because at this moment it's hard to say what yield will apply for such a product. But if we compare residential market in Germany to office market in Germany, we would see that yields for residential portfolios are even lower than for offices. So it is here are yields that are in Europe and in Poland as for today. But the reason why we are planning to build a big platform with 5,000-7,000 units is to be able to look for potential investors in abroad, and for such a financial investors, size really matters. So this is the reason why we are thinking about such a big scale. How we are going to do it? What will be outsourced? What will be done in-house? So as I said, whole development process will be outsourced in Echo. Echo will be paid for it, but the platform will have its in-house resources to do marketing, to do sale, and to do property management. So this is what is our target for today. As I said, today almost 3,000 units either are under construction or in preparation. 7,000 in next couple of years. And I also mentioned about our product, how it is divided. So as you see here, 90% of flats that we are preparing for rent are 1 or 2 rooms. It's relatively small, so this is why this is not the best product for big families. How we are going to organize it? So we will do a separate company, separate run company. We will have a partner in this company, financial partner. It will be one of the fund which is managed by PIMCO, and they will have 70% of shares in a future JV company. 30% will stay with Echo. We, as I said, will do in-house property management and sales and marketing. The rest will outsource, mostly in Echo. And at least 1 year lease contract, so we'll have stable cash flow for these products. Well, I think that's all for today. So I must say that I'm really excited that we are starting this process. In fact, today we are only waiting for approval from Anti-Monopoly European Commission to sign final documents, but everything, in fact, is already agreed between partners, between Echo and this PIMCO fund. So we are only waiting. We'll wait for another couple of weeks for consent from Anti-Monopoly European Office, and then we'll sign the final contracts and continue development of this project. Thank you.
Thank you. So once again, from the financial perspective, we believe that this is not really a one-off opportunity. It's not just a project. It's really a new segment, new business line that will continue because, as Piotr explained, the opportunity is huge, in fundamental terms because of housing needs. And financially, as it was also mentioned, the returns that we expect in this segment on our investment are similar to returns that we see on our commercial projects. So it's fully consistent with our financial objectives and with our strategy, and it's also complementary in terms of the business perspective. Coming back to financials, I would like to add, just going closely to the end of this presentation, to add some information on our balance sheet, year on year, and explain how we look at this and what happened. I think, when you look at our assets year on year, you can really see that the part of our balance sheet which is growing fastest is the assets under development. So these are commercial and residential properties that are under development, and the growth here is really huge, right? From 1.4 to almost 2.3 billion, and this is a reflection of what we really focus on, right? We are a development company, and this is the asset category on which we make money, right? If you look at our liabilities, clearly our net debt remains, as it was a year ago. It's below 30%, 29%, and our cash figure is very strong, 500 million, and of course it was end of Q1, but it remains strong. And the reason why we want to have cash on balance sheet is, of course, for safety reasons, but also to be able to invest in our development, in particular, as Niklas mentioned, land acquisitions. And of course, we do this selectively. We buy land, if it is attractive, but we want to be able to close these deals quickly, because this is how you can grab opportunity. The bonds, our bond activities is important. We continue to issue bonds both to institutional and retail investors. As I mentioned before, we did this also very recently. So we see that the market is working well for us. As of today, we have 400 millions. That was the full amount of the bonds maturing in this year. We have refinanced or redeemed all of them except for 80 million, which is scheduled for June. This is on the redemption side. On the issuance side, we plan to issue at least 200 million or approximately 200 million of bonds this year to retail investors based on prospectus that we have already approved. So we will do that for sure quite soon. Let's look at the asset structure more in detail. So our total assets are around 4 billion PLN. As I mentioned, the biggest group is really comprising two elements, which is commercial properties under construction and residential properties under construction, and that's the one that had grown a lot because our total increase in the assets was 20%, but it was we basically doubled year on year the amount invested in commercial properties under construction. Of course, our cash is also higher, as I already mentioned, and we have less properties held for sale because we simply sell quickly, and this is this is our strategy. That's how we are working. So once again, a quick look on our financing. So we have done almost everything that was planned for this year already. So we have approved prospectus for retail bonds. We issued 50 million of bonds. We issued 140 million of bonds to institutional investors. We have extended working capital facilities. That's also important. We continue to work with a number of Polish banks that provide to us working capital facilities that we can also use to manage liquidity in the group, but also to draw if we need to make quick acquisitions. And what remains for this year is really to issue around 200 million of bonds, and that would be it. I would like to remind you on our dividend policy. So we have paid 50 groszy per share as promised out of 2017 profit. So our policy, as declared or as announced 1 year ago, is to pay up to 70% of profit in the future. So out of 2018 profits, we will also pay up to 70%. The rest will be reinvested in growth, because we want to, of course, develop our business as well at the same time when we provide returns to our shareholders. That's it. In the appendix, you can see, as usual, the details of the projects that we are running, divided into different groups. So I would encourage you to look at that. And of course, if you have any questions, please come back. We have more and more projects, so it's not really feasible to go through all of them. But clearly, I'm sure that if you look at the details of what we show here, you will see that our pipeline is very strong, and the outlook looks promising and good both in 2018 and in the next few years. Thank you.
So if we're going to summarize the Q1, we will say that the residential business continue growing as planned. That has always been our strategy, continue growing our residential platform. Our office platform are delivering results as according to plan or better. We see a huge interest for our offices and also from our commercial buildings that we're having in offices and retail. What also is interesting, we started up a new business, Resi for Rent, less cyclical than the rest of the businesses, a long-term business that we continue building on, and it adds a huge value to our destination project. It gives a better efficiency of the destination project because we can use the land much more efficient and also gets diversity to those areas. This is all in line with what we have said all the time going forward. We are delivering according to the business plan. We see a great 2018 ahead of us, and we are very positive looking forward for the business. Thank you.
So now we have the time for Q&A session. If you have any question, please do ask. Okay, so for the beginning, we have two questions from investors and analysts watching us via internet. The first one was regarding to Resi4Rent platform. In the presentation, we have Gdańsk plot presented, and in our management report, there is no such plot, and the question was why?
Okay, the answer is that this is the plot which is not in Echo portfolio. In Gdańsk plot is a plot that is interesting only from Resi4Rent perspective. So this is just the reason. So we have just a market opportunity to buy such a plot. I'm saying about Resi4Rent platform. So this is the reason.
And the other more general question is about the view of our management board on office sector in regional cities as well as in Warsaw. What's the future, and if we are not afraid to continue invest in those cities?
If you see in Warsaw, we are having one building ongoing that is halfway through construction. We are 100% leased. We're constantly monitoring the leasing level in all the regional cities and all the projects where we are starting up. If you look at our portfolio today in the regional cities, we have almost zero vacancy. Everything we have started in Sagittarius, Westlink, they are pre-sold and pre-leased. So if you look at us from a perspective, of course, we're always looking at the market. We see a huge interest from our tenants that follow us out in the regional cities, but we're constantly monitoring how much money have we spent and how is the leasing level in all the different products. So we are constantly monitoring the leasing level, not to take any risk of expanding too quick in any part of the cities, and always looking where the market are at a given situation.
Any other questions? Okay, so one question, one again from our analyst via internet was about the return on Resi4Rent platform. What is our expectation and what is our plan for the further future with this stake in Resi4Rent?
Right. So that's more a financial question. So I will take it. Well, I think I mentioned already that the returns in terms of financial parameters, meaning profit on cost, IRR, cash multiple, are similar. The returns that we expect are similar to our commercial projects. So of course, this is I would say on project level. We talk about portfolio here of 5,000 to 7,000 units, and our intention is to really consider our options when we reach this size. And of course, there's a number of options, which is to continue, to grow the portfolio further, which is to exit fully or partially to financial investor or through Warsaw Stock Exchange. Because as you may know, there's a law which is being currently right now prepared by our government, which is to allow residential REITs. So if this passes, there would be another opportunity, of course, to exit through the stock exchange. But actually, as I said, we don't look at this as a one-off project. So something we do and that's it. We look at this as a future huge business segment of Echo that we intend to develop and stay in. So regardless of what happens to to this portfolio and how we manage our options, we believe that this is a permanent opportunity, and that would be a segment that could grow in size for sure, comparable to the size which is comparable to other segments. And the reason is what Piotr mentioned, is that the gap between the demand and the need and what is currently offered is so huge that that this is a work not for a few years, but for maybe 20 or 30 years. So clearly you have of course some cyclicality, but the good thing about this business, the rental business, is that it's actually if you look at the world, at more developed economies, this is clearly less cyclical than the business of apartment sales, where you have big changes in volume between the the height of the market and the low point. In the rental business, it works slightly differently. What happens from time to time, you may need to adopt to slightly lower rent levels for a certain period of time. But that's it, right? You don't have the same type of cyclicality, price volatility that you may have in residential for sale. And our approach to this is very long term. We are not focused, by starting this business, we are not focused on, what is the impact on our results in this or next year. We are focused on the long-term outlook, and we believe that this is, very important strategic decision that we took to develop this business and to be the leader. Because actually, I think it was also mentioned that although the rental as such is quite popular, not as popular as in Western Europe, but it is existing definitely as leasing activity. There is no institutional rental practically, or it's very small, and for sure there is no investment product. By which we mean that there is no investment product such as shopping center or office building, etc., that can be sold as an investment assets. If you build a portfolio, if we build a portfolio of that size, we offer to the investment market an investable product, which is an instrument in which you can invest and earn return similar to the return you are earning on the funds or on shopping centers. So this is of course fully consistent with the idea of residential REIT, and this is actually a product that can be made public through this vehicle. And this is our intent. We want to build not just the building and not to rent it, but build an investment product. And this is of course strategically very important. And once again, the returns we expect to make are basically very comparable to returns that we make on commercial projects with, that's current estimate, with less volatility.
Another question on Resi for Rent is who will be the source of project for Resi for Rent? Will it be only Echo Investment, or it can be also other developers or other sources?
No, it will not be only Echo Investment. Gdańsk is such an example. Source of land, because Echo will do development management for Resi for Rent, and Echo has kind of exclusivity for such a service for Resi for Rent. But talking about land, we assume that also there are some locations which are suitable only for residential for rent, not suitable for other Echo businesses. So we intend to buy land also from the market dedicated for Resi for Rent. Talking about, as I understand from the question, that whole buildings from other developers, theoretically, yes, we will see what will be available on the market. The only condition is that we need to buy the whole building. We are not interested in separate apartments. We just only want to have the whole building, and not any building, but building which meets our standards, which has the structure of flats that we want to have. So theoretically, yes, but I would say that most of the project will be developed by or with the help of Echo.
Echo cashing the development margin, or is Echo intended to sell the platform at cost, the apartments, or with a small margin, let's say 65%?
Right. I think, as we explained, there are two steps, right? One is the pure development, where Echo works as a developer on its own plots or the plots acquired directly by the platform, and this is done with a small development margin that was already mentioned, and it's actually construction management that we are doing, because the platform takes the full financing effort in form of equity and debt to finance this development fully. So Echo is really not exposed to, it's not really investing its own funds in that, and that's why the fee that we agreed to make is a fee for management actually. but on investment, of course, on our the return, the actual return that we intend to make is on the investment in the platform, and of course this is driven by the NOI that the platform achieves divided by the yield. What is important, of course, and where ECHO interest is as well, and I think it was already mentioned, but I would like to highlight that, is that we have a number of plots that are so-called destination plots, right? And this is our strategy, and it's very important for us to be able to buy these large plots on which we can develop large projects. Typically, these plots are, for zoning purposes, they may be used not only for residential, this happens, but in many cases, if you look at our projects, in a project list, actually, in the projects which are in the preparation, you will see that these are projects that are not quite often suitable for residential for sale, but this would be rather for this type of service product, which is resi for rent. And this and the combination and joining forces with the platform is also important for us to be able to buy, these plots, because we have a good use sometimes for, a very substantial part of the plot. And there are examples like Krakow, for example, where this resi for rent is clearly maybe not the only way, but clearly by far the best way to use the plot. And of course, this is helping us to be able to buy this plot and to do this at the price per square meter, which is very competitive.
On page number 24, you present the yields prime.
Thank you. On page number 24, you present the prime yields on renting apartments, and it seems that Poland stands out in the crowd, let's say. Above 7%, it's very impressive, and I'm afraid that you present it based on development on cost, right? This is the yield on cost, not on...
No, I think what you have in the table is of course, estimates by, by the, provider of this assessment for the whole Europe. But if you look at yield on cost, of course, the platform has two advantages compared to people who buy these apartments individually. And these advantages are that the platform, of course, the cost for the platform to build, to construct the apartment will be lower because it's really a construction cost, right? Plus land, etc. And it's not, platform is not buying, individual apartments. So obviously this is one difference. Another difference is, as Piotr mentioned, the platform is using leverage to enhance equity returns. And of course, if you are an individual owner of an apartment, typically you do that, especially these days, in order to find an alternative use for your cash that you have on a bank account. And the availability of financing, for that is quite limited. So, of course, your equity return, if you are an individual owner looking for, a better use of your money compared to bank deposit, your return will not be, it will be good, right, but not that impressive. I think the reason why platform works from the perspective of return is exactly that. I mean, the main two reasons. First, platform has a lower cost to buy individual apartment. Secondly, platform has leverage. And of course, the third element is operating costs, because clearly operating, 400 units in one building, you will have a lot of operating efficiencies that are not available to people who own simply individual apartments. So, so we are actually completely satisfied with the price levels that are currently in the market, because we will have a number of financial and cost advantages compared to people who determine the price in the market, which is really retail people. And speaking about yields, of course, two comments. One is that these yields are in different currencies sometimes, right? So this is part of the explanation. But we believe that the reason why over time residential yields should go down is really the size of the platform, because clearly, you can't expect similar return on individual assets and on the portfolios. If you look at Germany, for example, or other countries, I believe that one of the reasons why these yields tend to be extremely low is that there are companies there which own like 400,000 apartments, right? Which are huge numbers. And of course, if you own very big portfolios, they are extremely diversified, and basically from risk perspective, the income you earn is very, very stable. And that's why investors who buy shares in these companies, in these funds, are satisfied with much lower returns. Of course, this takes time, and we will prepare to wait, to work really, against this objective. But first, it's the size, right? And we believe that this 5,000 to 7,000 is really the minimum size at which this platform is investable by external investors. But actually, we would be very happy, with a by far bigger size, because clearly this is what investors like. Actually, in this business, size is very big advantage.
I completely agree with what you are saying, but my question is only whether the yield you present in here is your yield, or is it the yield you see on private?
Here, so you can see that the source is Cartellites. It's a report that they published.
So your return should be higher than the 7.4%.
Well, I think that, as Piotr mentioned, honestly speaking, we don't know what is the yield that we can achieve, many years from now. But we see that fundamentally that should be at least as good as the yield in the office sector, probably much better. But currently, Poland is an outlier, right? It's an outlier. Actually, we think that the yields will be lower. And just to remind you, that means that our yields will be lower. It means our return will be higher, right? Because we expect, certain rental income, which translates into net operating income. So, and we divide it by the yield. So if yield is lower, accepted by investors, our, value of our assets will be higher. So, we would be happy actually that the investors accept lower yields. If you ask about our development yield, actually you can calculate that, because if you look at our, Resi for Rent presentation, for example, which is on our website, you see that we show both total budget and expected rental income, which is based on rental rates. And then you see that our development yield is actually pretty high, which means that if we have an exit yield which is low, our profit will be significant. So if you really want to go into the details of that, I encourage you to look at the presentation, and you will see that the development yield that we expect to achieve is actually higher than the development yield we achieve typically on office projects, right? So it's a very, fundamentally speaking, it's a very good situation to be in. Of course, there is an element of uncertainty about the exit, but looking at, I would say, the whole Europe, we are happy to take that risk, right? Because we think that that the opportunity is by far bigger than the downside risk here.
Thank you.
Any other questions or comments? If not, of course, we are still here. We invite you for a coffee and further discussion with our management board members. Thank you for attending this meeting, and to see you in a couple of months.